Assalamu alaikum wa rahmatullahi wa barakatuh, ladies and gentlemen. So, here's just a quick tip. Now, essentially, I don't really have the drive to make these videos. I don't know if anybody really benefits from them. But unfortunately, the type of person that I am, I'm still going to make the videos, even though that I might feel like nobody's going to be benefiting from them. I know that the information that I can provide you is going to be very valuable and you might not see it. I'm not going to be the person who try to convince you or advise you that look here, this information is good. But I'm still going to make content. My HDMI cable wasn't in properly, but I'm still going to be making content. Just so that I know that, for example, there's been so many trades that I personally had to miss this weekend due to unforeseen circumstances, and that's just life. And knowing that I were able to miss it, right? I'm the type of person that even if I missed it, I'm not going to safeguard it, safe keep the information so that I'm the only person that can benefit from the information. So yeah, so let me just give you a quick breakdown. So this was yesterday, right? So just watch the Ichimoku cloud. So as you can see over here, here we had a decent downward push, didn't really break the clouds, and it just been under the cloud. So then kind of broke the cloud over here, right? So let's say it came down and it got on any of these buy signals, you would have made profit. Then here you would have made profit and you would have made profit even though it's under the cloud, right? But then as you can see, it broke the cloud and then there's multiple buy signals above the cloud. So essentially, what the cloud means is, right, it's known as a trend indicator. Let's just go to a higher time frame to give you a breakdown. So as you can see, when market breaks a cloud and it's above the cloud, it just gives you an indication that look here, it's in an uptrend. If it breaks below the cloud, it gives you an indication, look here, we are in a downtrend. Right? That's essentially what the Ichimoku cloud assists you with, right? So if you have a look over here, right now it gave you a buy signal there, right? If you got into that buy signal there and you didn't cut your losses, it would be unfortunate for you because that would have been a big drawdown on the specific pair. Gave you a buy here as well, didn't spike in profit. Gave you a buyer, a buyer, gave you a buyer, spike, a buyer, spiked. Yeah, you'd have made some profit if you closed in profit after those spikes and you didn't get in on this ones. Or let's say, for example, you woke up in the morning, it was here, it still didn't spike, you got in there and it spiked and you closed in profit, right? So now overall, even though I know that at some point it is going to spike here because it's been in such a strong trend, what I would rather do is wait for market to break the cloud, change some sort of structure, and when it comes down to a retest, I wait for like a buy confirmation and then get in on those bases. That's how you can alleviate, or how do I say, not for example, get kicked out on ones where it doesn't spike. So this is 1, 2, 3, 4, 5, 6. So let's just say all of these you would have been finished. Halas, your account would have been gone, full margin, finish gone, right? But then I'm going to show you the difference when it actually this was the day before. Gave you a buy, full margin, you sorted, full margin, you sorted, full margin, you would have still been sorted, full margin, still sorted, full margin, still sorted. Yeah, you full margin, not so sorted, but you may be full margin position here, and a position here, you have a less loss opportunity, right? Well, that was one out of how many? Cool. Full margin, full margin, full margin, full margin, full margin, full margin, full margin. um, Full margin, full margin profit, full margin profit. Like this spike here, this move here alone, right, is about, on a 5 lot size, you easily make $250. Seven, you can make about, both of these moves you can make about 5-10K in a short period of time. This move, decent, 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 decent. Decent. So can you see above the cloud? Yes, cool. Above the cloud, strong indication of a buy trend. gave you a buy, you got out, buy, 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 maybe you didn't get out, broke the cloud, you say, okay, you cut losses. You're done. Alright. Here, you see, poof, 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 gave you a buy, right? Very high. Gave you a buy, you got in, break the cloud, oop, get out. If you didn't get out, you're waiting for it to go into profit. That's where it would have gotten you. Right? But think of it, one closing profit, 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 closing profit, closing profit, closing profit. Um, and then cut losses. Yeah. Yeah. So that would be one specific pair. Let's go to a different pair. For today, buy profit, buy profit, buy profit, buy profit, buy profit, and then over here, buy, but it's breaking the cloud. So yeah. Over here, it's a lot as you can see. Break the cloud, sell, sells, uh, and then here sell, break the cloud. So a trick for you as well would be, there's many ways for you to actually um, create a strategy using it, using the softwares or the indicators as it's non-repainting. So for example, a trick would be for you as well, market breaks the cloud, you want to cut sales under the cloud. If it's above the cloud, you don't want to cut sales. So let's say for example, you'd have caught this cell, right? But you wouldn't have caught any of these cells. You would have caught this cell and you wouldn't have caught any of these cells. Boom, 300. You would have caught this buy maybe. If not, this buy was above the cloud. You have closed in profit. Let's just see if there's any more. Buy above the cloud, close in profit. Let's say you're still kind of in the cloud, so maybe rule of thought, or you can add that into your thing just to be a bit more accurate. Say that okay, it needs to give you a signal, but it mustn't be in the cloud or touching the cloud. You understand? Then you wouldn't have got in on that one. If you got in on that one, you say once it out of the cloud, 5 minutes, you cut your losses. Cool. Even though you could have caught moves under the cloud, right? Yet it was above the cloud, didn't give you any buys, didn't get in. Didn't give you any buys above the cloud, you didn't get in. Yeah, it was a buy. Let's say you waited, for example, for a very long time now, no buy signal. You said you had the rule when it's in the cloud, you're not gonna. So you say, okay, now I'm just gonna adjust it. I'm gonna say, okay, I buy here, breaks the cloud, you maybe cut your losses, and then it spikes, and you're like, you didn't cut your losses and you waited, and you went into profit. Cool. Let's say you cut your losses and you got another opportunity, like, okay, I'm gonna get in now, okay, and you get in, and then you hold, and then you made some profit, right? That would just be rule of thumb. Crash. Okay, let me just go to a different pair. Boom, 500. This one wasn't really it's like a consolidation period, as you can see, not really a push to the upside, green and red cloud. So let's just try to work it back to where there was actually a decent push to the upside. So so broke the cloud, under the cloud, breaks the cloud, get a buy signal. Let's say you've been waiting now for a long time. So even though it's kind of in the cloud, you would still get in, right? You'd have gotten in. Commentate, maybe put your stop loss under the low, and boom, profit. Even if you got that year's profit, you got that year's profit all year. Cool, done. Here you get another buy here, boom, you get in. So this is on your rule of thumb, you're entering one position, right? But you could have entered one and another one and you're still closing in profit. So one, still closing profit. Cool. Let's say you don't get any of these. And this one comes over here, you get this sniper entry, profit. Here you get in, goes up. Okay, so maybe you can say if it is like consecutive ones, you say you put your SL maybe just under there. We can just see how that works. So you bought here, based on that spike, SL is here, profit opportunity. Yes, you could have hold, whatever the case may be, but you're closing profit. Yeah, closing a profit. Yeah. So now let's just go to over here quickly. It was one of those pairs. There was one I just wanted to check something for you. Oh, I wanted to check for where it went under the cloud and still spiked. Yeah. Okay. So what you can maybe make it is your previous low. So let's say for example you get in ones where for example it's a bitchy out of the cloud or it just breaks the cloud, then you can rule of thumb you put your SL, you look left and you put it as your previous low. So even though it kind of did break the cloud, right, it still shot up and went back out, you wouldn't have cut your losses. So what you can see in this video is the fact that essentially while we were just making a video, I was creating essentially a strategy, and then while creating the strategy and backtesting, finding things that where it doesn't work, and then finding ways to accommodate it to see that when it actually does happen in real time and it doesn't maybe respect those zones, because yes, it can spike. For example, um, let's say when it gives the buy signal, it can spike, for example, just here, but then, for example, it spiked only afterwards, like 3 minutes, 4 minutes later. And then you maybe cut your losses because you say as soon as the market just breaks the cloud. Because remember, as much as it's based on technical and statistics and previous price action and stuff like that, it's all based on you can't really predict exactly when it's gonna happen, right? It's gonna it's gonna happen, but you don't know exactly. So I can say, for example, I expect it to spike here, all right, but it might go down for instead of in 3 minutes it spikes in 7 minutes. That makes sense. So on that basis of let's say yeah, it gave you a buy, kind of break the cloud, you say okay, your rule of thumb, you're still gonna hold it. Where here would be in a perfect example. So you got a buy, spike, let's say you didn't close, gave you another buy here, right? Broke the cloud, so obviously you're thinking, okay, I'm gonna cut losses, but then you accommodate previous low and profit opportunity. And that would just be a way for you to actually catch spikes. Yes, it's going to be a bit more of a patient way because you're waiting for when the market is above the cloud. And even though you had this buy signal here and it buyed and it actually shot up liquor, right? You missed it just so you can get in on this move over here and this move over here. Understand? And then you're not getting on this move here. So even though, let's say you bought here and you bought here, you're still closing in profit. You're not in there, right? That will kind of just assist you on days like when it gives you a buy, and it's under the cloud indicating it here. Um, it is going down, right? And even though it did spike, it's not that spikes that's really gonna make you satisfied with the profit, and then you might end up holding and going in a liquid drawdown. And even so, afterwards it's recovered, many of us don't have enough money to actually hold the trade. Some people trade with $10, $20, $30. Even if you trade with $100, it is not that much, right? So rule of thumb is you want sniper entries, you want to get in and get out of your trades. That would be the concept. So you get in here, boom, boom, you put in a two lot size, you're making $10, $15 in this move, you're done. Here, let's say for example, you put in a buy, it spike, you can close, you're going to let's say a minus $30, just giving a rule of thumb, and boom, you spike and you're in a $10 $15 profit. You can close. It's done. It's a short period of time. You get in again, you make another $10. You're done. You know what I mean? So that would just be many different ways that you can actually do it. And obviously, if you add in more technical analysis and stuff like that, so for times, for example, when the market is very low under the cloud, because yes, a rule of thumb, when the market is low, you do want to buy, but as well, when it is obviously going down, it's also stating that, okay, look, it's going down. So in order to find that reversal zone, you'll go to your higher time frames, check, okay, cool, where's the market, whatever the case may be. So let's just say, for example, if I did this on the daily time frame, right, and the market comes over here to the 78.6, right, so it's been dropping, but as it comes there, right, and it gives a buy signal, I'll get in because based on a higher time frame, that could be a valid reversal zone, and that's how you could use it that way as well. So when it's under the clouds, maybe a bit of a more higher time frame trade to catch that reversal point. Then when it's above the cloud, it's a continuation of a trade. Anyway, peace in the Middle East. Assalamu alaikum wa rahmatullahi wa barakatuh.